Hi there, welcome to Nepi Invest. The past 2.5 years have been an absolute nightmare period for long-term shareholders of a company called Nuix. Nuix is an investigative and analytics and intelligence software company that listed on the ASX back in late 2020. Now, when it did IPO on the ASX in that period, there was a lot of fanfare around this company, a lot of hype, a lot of interest, not only among retail investors, but also institutional and fund managers. And that's one of the reasons why just after this company listed on the ASX, the share price ran up to a high of almost $12 in early 2021. And then the company started to release negative news. And it was just continual leaking and releasing of negative news from this company, starting in February of 2021. And this continual release of negative news drove the share price of this company from $12 or almost $12 all the way down to a low of around about 52 cents in October 2022. But it seemed like possibly there is a light at the end of the tunnel for this company and those long-suffering shareholders. And it does seem possibly that this light at the end of the tunnel has been confirmed from the company with the release of their financial year 23 preliminary results, which were released on July 20. And the market absolutely loved these results. And that's why the share price of this company rallied 37% on July 20. Now, this does not mean the share price has moved into an uptrend. It does not mean necessarily the sentiment in this company has changed from negative or neutral to positive. But this is definitely the first step in the right direction for Nuix, because this company, instead of being a non-growth company, which I have shown over the past 2 years, is now growing. You can see that by the results. Now, on this particular screen, I have this particular announcement on the right-hand side. So this is the preliminary results for financial year 23. On the left-hand side, or the right-hand side, depending how this is recorded, I have the financial year 21 results. And these were not good results from the company, released in August 2021, because at this point in time, there was no growth from the company. In fact, if you look at revenue, it was flat, gross profit flat, EBITDA down 50%, and profit down 107%. If we turn our attention to the preliminary results for financial year 23, we have analyzed contract value up between 14 and 15%, statutory revenue up between 19 20% to 181 to 183 million. And that number is higher than the revenue was back in financial year 20 and financial year 21. Underlying EBITDA up between 51 and 61%, and statutory EBITDA up between 164 and 189% to between 32 and 35 million, which is higher than financial year 21. Still lower than financial year 20, but things are moving in the right direction for this company. It also, in the commentary, Nuix experienced a strong close to the end of the financial year with several key contracts executed in June. And at the bottom of this, they talk about cash flow. So this positive underlying cash flow compares to the company's previously stated aim of being underlying cash flow neutral for the year. So, in fact, their results beat the company's management expectations. So Nuix ended the financial year with cash on hand of $29.6 million and no debt. Now, the share price of this company did rally 37%, and the share price closed at $1.12. So let's have a look at the chart and see whether possibly this is still a buy. Now, this particular chart right here is the weekly chart of the company going back all the way to when the company listed on the ASX in late 2020. And in fact, you can see the share price went to a high of almost $12. In fact, the high in the week of the 18th of January 2021, the high was $11.86. And then the company released their preliminary results in February 2021, and the share price dropped in that 1 week 34%. That was a catalyst to get out. That was the first piece of bad news released from this company. And a lot of times when a company releases the first bit of bad news, there's going to be more to come in the future. And that's why when a company releases bad news, I want to get out as soon as possible. Because even if I got out at the low of that week, the share price was still $6. And then the share price went from $6 all the way down to a low of 50 cents because of the string of bad news released by the company. And that low was in October 2022. But it does still look like things have started to turn around. If we turn our attention to the daily chart, we can see things starting to turn around. Just zoom out a little bit in late 2022. Even though the share price did reach a low of 52 cents on the 3rd of October 2022, and that was a low. At that point in time, we didn't know that was low. The share price was still in a downtrend. But the next two lows were higher than that low. So that's a first sign things are starting to turn around. And then in January, February of this year, there was a little bit of interest in this company. And the share price actually went from 62 cents to $1.50, almost $1.60 in a brief period of time, about a 1 month of trading. But when you see that sort of rally in the share price over a very short period of time, you're going to see a lot of selling from those shareholders who bought in higher prices in the past. So to match that selling, you need demand, or that supply, you need demand, and the demand wasn't there. And that's why the share price started to drop down after February. And the share price kept on dropping. In fact, the share price moved back into a downtrend back in May. In fact, the share price went from that $1.60 all the way back down to about 70 cents. And I would say that the market got this wrong. And you can definitely see how or why the market got this wrong if you look at the 1 hourly chart. So let's have a look at that right now. So if you look at the 1 hourly chart for Nuix, the share price was in a well-defined downtrend from, again, April. Share price was showing, the telltale signs of a downtrend, lower highs and lower lows. And every single time the share price went on a brief rally, there was more selling. And so every single time the share price went above, for a brief period of time, above the 150-hour moving average, it fell lower until July the 20th. Now, on July 20th, the share price did get a high of $1.24 in the first hour of trading. In fact, I think it was the first probably 15 minutes. So let's have a look at the 15-minute chart to confirm that. Yep, in the first 15 minutes, that's where the share price got to its high. So you want to see the high ideally reach towards the end of the trading day. And the reason why the high was reached in the first 15 minutes was because of over-eagerness by, more than likely, retail investors. And there was a little bit of selling during the day. And the whole reason there was a little bit of selling during the day was because of those shareholders who did buy into Nuix during that last run-up. Maybe even after that last run-up, they saw the share price moving into an uptrend, and they thought, whoa, the tide has turned for this company. They bought in, say, around about $1.25 to $1.50. And as soon as they saw this rally in the share price today, on July the 20th, they saw that opportunity to get out of this dog stock, because the mentality of most investors, and I'm assuming here by saying most investors, is if you buy into a company and the share price falls, it becomes a dog stock, and you have to get out of that company as soon as possible, or as soon as the share price gets it back up to the level you bought in. So that's why there's a little bit of resistance, a little bit of selling as the share price moved above $1. And what we need to see in the next few trading days is enough demand to meet this supply. I do think there's going to be still supply of these shareholders who bought in higher prices over the next few trading days. And we just need that demand. And the best way we get that demand is by interested fund managers, institutional investors, that sort of thing. Now, what I'm going to do is just wait over the next few days just to see if we don't see intense selling. If we don't see intense selling and the share price stays above $1.05, that's my key level, $1.05, I might take a short to medium term position in this company. So that's all I have really got for Nuix today. Congratulations to those shareholders, particularly those who bought in the last few weeks at share price less than 80 cents. You've done well today. And more than likely, those shareholders or traders have now sold out, because whenever you see share price rise 37% in one day, that's a good day. So if you have any questions, any thoughts about Nuix, maybe you're a bull for the long term in this company, and this is an ideal time to take a position in this company, I'd love to hear your thoughts about Nuix. So leave your thoughts, your questions in the comments section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs.